JP Morgan actually looked at a large universe of stocks, in this case from the Russell 3000. They looked at those stocks between 1980 and 2014. And what they found was about 40% of all stocks actually suffered a permanent 70% or worse decline from their peak value. So, folks that get caught up in that 40% with their concentrated stock, that's a pretty big deal if they see such a big piece of their wealth take such a large dive. And in those situations, a lot of those folks will be kicking themselves, wishing that they had actually gone ahead and paid that tax. I work with quite a few investors that have these concentrated stock positions. And oftentimes it's coming from equity compensation from either a previous or current employer. Maybe it'll cost me 30% at my tax rates between federal and state to sell this asset and diversify it. And if I lose 30% of the value to taxes, well, that value is gone. Whereas if I just continue to hold on to the stock and maybe the market price goes down by 30%, at least I still have hope that the stock can come back. You can invest that entire $1 million, diversify it in a growth-oriented, diversified portfolio. But in the direct selling approach, whatever you have left over after paying usually a very large tax bill is what you can invest. And so that direct sell approach is just typically not going to catch up to whatever you invested in the exchange fund approach. You want to have a good feel for their investment time horizon. Can they afford to lock up, this asset for an extended amount of time? With the cash exchange fund, you're still going to have a growth-oriented stock portfolio, right? We're not talking about diversifying into, bonds or what have you, or money market instruments. Obviously, a lot less risky than a concentrated stock position, but nonetheless, you have to have the risk tolerance for a stock portfolio in that case. Oftentimes, you're going to take an approach where you would use, multiple tools. You might use an exchange fund for a piece of it. You might sell some of it directly to free up some capital. You might utilize some option strategies, but again, it just depends on your situation and what's right for you. So the team at Cash has been very easy to communicate with, very easy to get a hold of, and the capacity to accept stocks from my clients has been very solid. And it also really helps that they have a great website where I can go on and actually check to see how much of a specific stock they might be able to accept for their next fund close.